So quick video on today's P-shaped profile. I've got today's chart, just regular trading hours only. So if you don't see that overnight swing low at 44.94-ish, that is why. We got this open, immediate bullish move after having an initial sell down off data that was snapped back up. We did get the seller that was sitting up here. It was just a tank, just reload, in this kind of 23 to 25 range, which is a range we've been talking about. I think I've been using 23.75 roughly. We got a liquidation off of it that was snapped up. Again at another familiar spot, this 4507 to 4505 spot. And what I always say about liquidations is that they're very easy to retrace. At least up to this 17 spot here, the point at which buyers just grind through this. You're thinking to yourself like, okay, well, if this guy gets taken out, I mean, we're just going to squeeze. And I think a lot of people were expecting that, expecting we would engulf the entire prior day, which was 39 was the high, and possibly get higher even, and just go ahead right to SPX 4500 was a target for a lot of people. And I point this out because this is something that I look at a lot. So what happens when what you expect to happen doesn't? Right? I mean, we come up here and we squeeze this guy for 3 points, and that's it. And that had me kind of scratching my head like, really? That's all we're going to get, off this guy? I mean, for sure, this guy just got murdered. What happened here? And we actually get a sell back down. Somebody, maybe the same guy, I don't know, makes the same attempt, and it gets snapped right back up again. And because of this move here and the aggressive quick move back up, you see the volume profile here is quite thin down here. You get this P. So this is what a P-shaped profile looks like. A large distribution up here and then just straight stick down. And so we consolidate in this range. And what's important about a P-shaped profile is that ultimately you're going to take some initiative buyers, some new buyers that are like, okay, well, this is a pretty good price here. That are willing to initiate and drive price up. And if that fails to happen, very, very commonly what will occur, and not even necessarily the same day, but potentially the next day, is that if this spot gets lost, generally the value area low, sometimes you could look at maybe where it really starts to get thin in the stick. Again, even the next day, this whole thing can just retrace if there's not initiative buyers to take this higher. And so I look at a couple of things to make a determination about whether I think that might happen same day, might happen the next day, and I don't really need to worry about it for today, and I'll walk through some of that. So the first thing that puts me on edge and making me think it's a possibility is what I just mentioned. Like, how do we not squeeze this guy? Like, we take him out, we have this huge move up, and yet still we can't drive price higher. Now, we were into the prior day's point of control was right in here, this 28 to 30 range. The day before, maybe a value area high or something like that, but there was some confluence here, the prior day point of control. And as I've said before, you've got the prior day as a reference, the value area low, the point of control, the value area high. And certainly if you're selling at the prior day's value area low, then that's extremely bearish, and you want to be really careful with longs. But similarly, if you can't really bid above the prior day's point of control, then, well, I mean, you can't go higher, right? And so we were butting up against that, and you could say, all right, well, it's just people that are bagged from yesterday that are maybe long, from above the point of control, and they're just getting out. Okay, I guess, but again, if you've got the firepower to take this guy out, he's not squeezing. Like, something's up here. This is kind of weird. The second thing is, it keeps happening. So okay, we sell off here, and then okay, fine, we took him out. We're gonna squeeze. Nothing. Okay, sell back down. Okay, we come back up. We take this guy out. We come back, and we even take even these highs out. You're like, for sure, we're gonna squeeze here, and so. This is what I'm looking for. If there's a seller that's up here, and he was mostly passive, and then you flip active a little bit, and you can kind of tell from the candles, if he's not stopping out and getting blown out, then something's up here. And so when you get this one last push, okay, so we clean up this high over here, nothing happens, and then we get this one last push, above value for the day, and then all of a sudden he steps on it. That's like, that to me is your one entry. If you want to take a shot here, I'm okay with that. Like taking a shot here, I mean, it looks tempting, and you're like, well, I'll just put my stop up here. Well, look what happened. Like you're short here, and you put your stop just above, you're short just below there, and your stop's here. So what happens is this guy that's just been eating all day long, is he's just waiting for it to get stopped out. He probably pulled off, I didn't have the book here, but he probably pulls off the offer. He lets the buyers get off sides and squeeze you out. So you stop, which means you buy. And he's like, yum, yum, more. And he just eats it, right? And then he's like, okay, that's enough. Let's take it down. And so, this action here, the shove, and then just immediate rejection, like this is maybe a short. If you want to take a shot here, off of this reaction and then set your stop, a little above here. You got to be careful because it's happened a couple of times now. That's probably an okay spot to take a shot if you're suspicious based on some of this other information, that we've talked about. The other play, if you don't take this, and we'll talk about trade management in just a minute, if you took that first one, but really the safer bet, I suppose, not really my style, but if, especially if I'm not at home, but if I am at the desk, I'll take this trade all the time. You can see what happens. We come down here, we're consolidating now. This is the 21 EMA, this red line, this purple line is a VWAP from open. And so you can see we're holding VWAP, but now we're trapped under the 21 EMA. So I'm definitely on watch here. I'm not just shorting because this is under the 21 EMA. 21 EMA does not always matter. It depends on the type of day. And that's a subject for another video. But ultimately what happens is when we do go ahead and break the value area low, again, you could have been conservative and said, I'm going to wait for it to get really thin in the profile. So maybe I'm going to enter here. You could see what happens. I mean, we just completely liquidate down and come all the way down into this 5-minute rebid spot right here. And to me, when I see this, you're basically targeting, roughly low a day. But I see this, I'm covering here every time. So to me, you can just enter sniper, get down here, get out. And then you can like reassess because, if we come back up here and we offer 17-ish, which we did, which is sort of just below, some of this initial chop from earlier, then, you could take a stab here and take it back down. But to me, it's late in the day. I'm not looking, to gain another 20 points or something, especially getting through this sequence here. So to me, those two trades, you can try to get in at the top, which from a risk-reward perspective is absolutely superior. But probability perspective, because you are in a P, there's a very good probability you just sit here all day. If you don't apply, some of the subjective clues that I suggested, you're kind of guessing. And again, you could have been guessing all day long in here near the top, and you get stopped, and you get stopped, and you get stopped like 3-4 times. But better to sell here than generally, these guys selling here was not a good idea. So those are the two setups. Pick whichever one is safest for you, and you can go with that. So I made a quick adjustment to the profile, and what I did is I started it here because this is actually a little bit more of a classic, what you'll see in a P. A P-shaped profile represents, most people will say short covering. It definitely represents forced buying, and in my opinion, this isn't any kind of hard number, but sure, 99.5% of the time, it's due to short covering. There are some other instances and types of forced buying that are outside of the scope, but it generally means shorts are covering. And so we got this situation, maybe this guy sold it to get out. That's entirely possible, but you got this really just stick thin profile and then into this P shape. So when you start it here, this is what a lot of days will look like when we open and we squeeze right away, sort of a classic P. Because we did this first, it's a little bit weird. I don't want to say weird, actually. It's maybe less common, the way that you'll see a P off of an open. It's usually going to be some kind of, data gap up slight where you just have a lot of trap sellers and they just cover the open, and then you consolidate it all day. But again, that's what you're looking for, is this kind of thin stick volume profile, your primary distribution, and then a lot of days you're just going to sit here and you're just bored and it does nothing. And I don't trade this chop. I'll trade this type of a situation. A lot of people will just scalp here back and forth. And, I guess that's okay. I'd probably want to be on the side of the buyers because if I know that they're stuck shorts for the day, I'm above VWAP, I'm probably going to go ahead and do that. But to me, not really looking for, 5-point trades over and over again. But again, some snipers are fantastic about that. So really that's it. I mean, you're getting in, you're getting out, whether you're taking the breakdown, down to roughly low of day or wherever you see some kind of a structural indicator that there could be some demand, or you're looking for some kind of a clue that we might break down today as opposed to the next day. And again, reiterating that this can carry forward into the overnight session potentially. It can carry forward into the next day. So the next day, if this had not occurred, then you would definitely be watching kind of this, 17 to 21-ish area to see if we could come up and maybe trade below, offer value area low, for the day, and then go ahead and liquidate down and fill this in. And that would be a good trade next day. So just want to give you this to add to your playbook, a couple of ideas here off a P-shaped profile.